Welcome, welcome. Very large crowd today, so get everybody settled in here. We'll start in about 3 minutes. I've got 11:59 Eastern, so we'll start at about 12:02. So let the group come in. You're in the right place. That's always the main thing with these webinars. So. I will ask while we're waiting for a couple others for the next couple minutes. I think those of you who have attended this or this webinar series in the past know I always get most panicky right at the beginning. So to the extent that you can see me and see the screen, always very important for webinars. So if you don't mind, just either maybe to raise your hand or that's probably the easiest way to do it. I think we've done that in the past. So very good, very good. Thank you, thank you, thank you. You guys are becoming Zoom experts. You guys are raising your hands and then lowering your hands, and extremely nice. So very good. We actually did a thing for the firm probably, I don't know, 7, 8 months ago, and we had a person did some training on Zoom, and on his auto signature, it actually said he was a Zoom expert. And I sort of joked with people, I'm like, pre-pandemic, I don't know if anybody knew what that actually was. So now we're all becoming Zoom experts. So learning our way out of his job in a weird way, but anyway, life on virtual presentations these days and conferences. But so I've got about noon so far here, so we're going to wait again about 2 minutes, and we will get started. Housekeeping notes too, when people fully join. Give it about 1 more minute. Really big group today, which is great. Hopefully that means the topic is of interest. If it were not, then you guys would not be joining. So always good to strike a chord. It is a little scary to sort of put out a topic for the next month and hope it'll be of interest to folks. And so we've had I think a pretty good run. We've had maybe 1 or 2 that didn't have quite as many attendees, but those tended to be super technical ones instead. So we had a few on there, but they were the few and the proud, I think, talking about all the super technical aspects. But well, I've got 12:02, so I want to make sure that we're able to cover a fair amount of the content. My partner, Mike Carey, on the phone will be guiding us through today. And those of you, again, who have attended these past webinars know we've got a team of 16, and so Mike is one of those, as our vice president at the National Gift Annuity Foundation. And so I am Brian Klontz, founder of Charitable Solutions, also the National Gift Annuity Foundation, DECA Foundation. So I just want to welcome all of you here today. So a couple of housekeeping notes. You may recall that we do not send out slides after the presentation. However, hopefully even better, we will send out the link to the best recording. So we'll be doing a recording obviously for this session and one for Thursday. And then also typically we'll then get all of the questions and answers scraped. So that's sort of a little housekeeping note there, that if you can ask any of your questions in the Q&A, and that way we're able to have that log, and then we can sort of combine those that are similar and then provide all of those answers to you. But most importantly, as you know, we post all of these recordings for free on our website. So it's the CharitableSolutionsLLC.com under resources and then webinars. So I think we have maybe 15 or so on there in terms of past ones that we've done. So bottom line is we don't send the slides out. Had some, we'll say, not so enjoyable uses of our slides in the past. suffice it to say, I'll sort of stop there. So we say if you want to copy all of our stuff, you actually have to do the work to copy it, which people tend to be a bit lazier on that front, which is peculiar to me, but that seems to be human nature. So, long story short, we are here to talk about Charitable Gift Annuities 101, what they are, where they fit, and how to get more with no risk. In particular, for better or worse, we'll be really focusing on gift annuities first in terms of some history, how they work, sort of why they're so attractive to donors, but then most importantly, how the National Gift Annuity Foundation can be a potential partner for charities that are unable or unwilling to issue gift annuities at all, or to the extent that they are in a state that donors are in a state that they're not otherwise registered, or for perhaps gift annuities funded with other illiquid assets. So Mike will take us through some of that too. So Mike, on the next slide, if you don't mind, I'm going to give, everybody knows this, so I hope this is not too painful, but we'll spend about 6 to 8 minutes talking about all the other weird things that we do, which I hope do provide value at some level. So when I started the firm, Charitable Solutions, in 2003, we have one sole mission. It's been the same since that point, and that is to help make charitable gifts happen that otherwise wouldn't. So it's really this nexus between tax and legal constraints, liability constraints around risk, and really helping planned gifts occur, again, that otherwise wouldn't, both from the direct intake, from consulting, from structure, and from compliance. So we have a very, very odd sort of niche lane, but we have a lot of fun doing it. So again, with a team of 16, we'll actually be a team of 18 by Friday, hiring a couple people that are now getting ramped up now. But I'll start maybe far right, just a couple quick comments about some of the odd things that we do. Many of you on the phone or on the webinar here today might say, oh, I know you as X, and that's fine, but we also have sort of Y and Z and some other odd things too. So the Emergency Assistance Fund Administration, bottom line there is it's very interesting from a tax perspective that employers can otherwise create funds for their own employees. However, to the extent that they have, in essence, undue or control over those funds, both in terms of the grant selection for disasters or personal hardships, or for the finances or governance, then that can potentially be the risk from the tax side deemed a bonus to the employee, so it's all taxable. So I created a charity exactly 10 years ago called the Emergency Assistance Foundation, and so we are an independent third-party charity. We have about 360 employer funds now. It's about 12 million employees that we cover globally, and so last year, believe it or not, we did 180,000 grants across the, again, global grants. We've got a team of 135 on that side. So bottom line is it's a way that large employers, including some nonprofit partners that we work with, can create tax-free grants for their employees who have been impacted by a disaster or by a personal hardship. And this is the big and, the holy grail of this space, is also being able to have donations coming in with charitable income tax deductions. So anyway, that's the Emergency Assistance Foundation side. The CE, what we're doing today, we actually do a lot of this, maybe 3 to 4 of these a week at this point, both virtual and a couple in person of late. So the last couple of weeks I've been traveling. And so we do that CE for professional advisors, for board, for staff, nonprofits, and for donors. So tend to do about 80 to 100 of those speeches a year. On our website, Charitable Solutions, we've got a list of probably 30 different topics. Do them from 1 hour up to 3 hours, which is painful, I'm sure, for the audience, because it's painful for me as the one delivering it, but that's what some people would like to have. And so we do a fair amount of those too. Top middle there, Charitable Gift Annuity Risk Management. So we have 2 actuaries on staff, so more of my academic background is on that side. And so we basically do stress testing of large gift annuity pools and use some of our actuarial modeling. We did a report, which might even come up during this talk, about mortality of charitable gift annuitants. So we did that for the Society of Actuaries. And so we use our internal database around mortality to be able to have, hopefully, some more precise projections about how these pools will sort of play out. Again, usually larger pools, 10 million plus is fairly typical. We've done maybe 260, 280 of those types of projects for charities nationally. And in particular there at the bottom, we do specialize a bit on very large concentrated gift annuity risks. We worked on one about 2 months ago that was $38 million on one person. Did one in February that was $15 million on one person, and one 3 years ago that was $28 million for 2 annuitants. So these can be big, and so that requires some additional risk management. We do both design and placement of gift annuity reinsurance where that makes sense, and help design the products for 7 different insurance companies sort of in that space. So that's the only thing that we do on the sort of insurance side where appropriate. Bottom middle, charitable appraisals. So we have 5 appraisers on staff. Without reading through all that stuff, our sort of theme now is if it can be given to charity, we can appraise it. I do the life insurance and cryptocurrency, about 8 to 10 of those a week right now, so a lot of crypto activity. And then we have, again, 4 other appraisers for their distinct specialty areas. So all we do are charitable appraisals, qualifying as appraisers, doing the qualified appraisals for the Form 8283. Top left is sort of our core area, so it's around non-cash asset management. So we actually do direct consulting to charities just on an hourly fee basis to help. Or I created the Decami Foundation in 2003, and it only receives illiquid or non-cash gifts. We are a national donor-advised fund. The other unique thing, however, is we never manage anything once liquid. So we only get referrals from charities, very important, who otherwise would not be able or willing to accept the gift. Tax risk, geographical risk, holding period issues, too quick of a turn, whatever it is, 100%, I'll say this twice, 100% of all the donations that we received and have received since inception were initially declined by the charities who referred it to us in the first place. So we take it in, we do all that, we call it the sausage making. We do everything, we're in chain of title, all of our legal team, et cetera, able to receive the gift, provide substantiation and so forth. And then when sold, you can see there we did 100 donations last year exactly, about $403 million in total value. These are not planned gifts, these are outright gifts. Average fee was 1.6%. That's held back at the time of closing. So then 98.4% on the dollar is then granted in cash 30 days after we receive the settlement proceeds back to the charity that referred it in the first place. So that's how that works. Very important point here, big nugget. That was our record year by far. So 100 donations, $400 million in assets. We tend to be around that $300 to $400 million in the last 3 years, so it hasn't super grown. This year is insane. So that's why I'm having to hire some more people too. So we have 100 donations already received this year, already over $400 million. So we typically have our entire year doubles in the last quarter, which I think we all know painfully starts in 3 days. So we expect very much to be not around the 200, probably around that 160 to 180, and probably around 6 to 750 million in donations in 1 year, only in illiquid or risky assets, real estate, privately held stock, a lot of cryptocurrency, anything of high value. Average gift last year was $4 million. It's almost dead on so far this year. So these are big gifts, otherwise that were declined. So just something to keep in mind. Massive, massive wave in this space going on. And finally, National Gift Annuity Foundation. I don't even need to talk about it. That's what Mike's going to be talking about. So I want to give him plenty of time to go through. There he is. He's getting very excited. So Mike's been with me for about 5.5 years now. I've asked him to come on to sort of really crank up the National Gift Annuity Foundation. We are now the largest independent gift annuity platform in the country by far. And so just want to turn it over to Mike. Mike's been in the plan giving space, I think, well over 25 years, and I've known him that whole time. And so glad to be able to pass it over to Mike. I will be, again, checking the Q&A. Ideally, if you can put anything in the Q&A, I'll be answering those questions. But other than that, Mike, it's yours. Take it away.
Okay, well, welcome everyone, and good afternoon or good morning, as may be appropriate. Let me shoot through this. Got to repeat. There we go. Okay, so we've got a lot of material to cover. I'm going to talk fast. I need you to listen fast, and through the chat and the Q&A, you can ask any questions that come up, and we will do our best to handle them as quickly as possible. So we're going to go right to the beginning. A charitable gift annuity, in its simplest form, is just a contract. It's an agreement between a donor and a charity. The donor passes typically a sizable asset to the charity, and the charity agrees to pay an income back to that donor for the remainder of their lifetime or for 2 lifetimes. These have been around for over 150 years in the US. I know there's a friendly wrestling match, I think it's between Yale and American Bible Society, on who wrote the first CGA. But in Europe, I've learned from Brian that they're over 500 years old. There were real estate grants and things like that in the past. So the concept has been with us for a good long time. The charity guarantees income for a maximum of 2 lifetimes. This is not like a CRT where you can have 7 or 8 income recipients and so forth. It's either 1 or 2. They do not have to be married in order to provide a guaranteed income. Same check in their mailbox or same deposit in their bank account every quarter for the rest of their lives. We follow the rates that are recommended by the American Council on Gift Annuities. They're currently between 3.7%, and the highest payout right now would be for a single 90-year-old or above, and that's 8.6%. Partially tax-free income. But remember, when you're explaining that to a donor, that the tax-free part is only for their expected lifetime. And I'll show that to you in a chart a little bit later. They will, if they outlive their life expectancy, they will still get that income for the remainder of their life. However, the tax-free portion of it falls off once they hit life expectancy. There is an income tax deduction available, and I think it's important to express it that way because 2 or 3 years ago, we had a big increase in standard deduction, and so only about 10 or 15% of Americans now are itemizing. And if they're not filling out a Schedule A and itemizing on their income taxes, they won't be able to use the income tax deduction. That doesn't have anything to do with the tax-free part of the income that they're receiving each year. Those are 2 separate items. But for the income tax deduction, they do have to itemize to be able to take advantage of that. And the remainder passes to the charity that they choose when the donor passes away and the contract is closed. So we have a happy couple here. They transfer cash or appreciated assets to the gift annuity. The gift annuity is created. It provides a lifetime income back to them. It provides an income tax deduction if they can use it. And we provide all of that paperwork, by the way. And then 100% of the remainder transfers to charity at the close of the contract and the passing of the income beneficiaries. It's a fixed lifetime income. The check never changes. It's the same amount every quarter. Typically, we have folks set up on a quarterly basis direct deposit. And I'll tell you an advantage that I found with that just earlier this year. They get an income tax deduction. It's based on the value of the gift, the donor age, and we calculate all of that. We have an online calculator that I'll show you, and then we also use Crescendo to provide full-blown 15-page illustrations. At the donor's death, 100% remaining balance passed to the charity outside of the donor's taxable estate. And generally, there should be 50% of the original gift left for charity. That's what's recommended by the American Council on Gift Annuities, and we show 50% remainders in our illustrations as well. One slight switch is with NGAF, the donor transfers the assets to us, to NGAF. We provide the income back to them. We provide all the documentation for them to take a charitable income tax deduction. We also provide quarterly reports to the charity. So you, 4 times a year, you get a snapshot look of the value of the gift, what we've sent to the donor, all the pertinent numbers, and I'll show you an example of that later on in the presentation. At the donor's death, 100% goes, so we have all that. We create a contract between NGAF and your donor with your charity as the beneficiary. We follow the rates and will never exceed the rates recommended by the American Council on Gift Annuities. We are currently registered to issue gift annuities in all states except Hawaii, and that may change. We're looking at it. Hawaii has some unusual requirements to issue gift annuities on the islands, and we're looking at that closely. And then the remainder is granted to the charity when annuitants pass and the contract closes. And the granted word is important because, as Brian said earlier when he introduced us, we are just a big fat donor advised fund. And so granting from a donor advised fund is the proper language. Gift acceptance, all the usual suspects: cash, stocks, bonds, mutual funds, and a lot more. Because of all of the work that Decamai and Charitable Solutions does, we can, on a case-by-case basis, we can look at real estate, closely held stock, all sorts of unusual illiquid assets that could fund a gift annuity. We create a share file connection and provide copies of all paperwork that go back and forth between NGAF admin and yourself. And that's where we'll drop your quarterly snapshot report. If you've not worked with us in the past and you bring a gift annuity to us, one of the early things in the process that will happen is Alexandra Sidor, who heads up all of our admin, will contact you to send you a link to set you up on ShareFile. And that's where she'll send draft documents for you to approve before they go to the donor. That's where it's a secure way for us to exchange documents back and forth with you without risk. We also have an online calculator that is available to you anytime. And I'm going to try a new share here. I'm going to go to Edge and say share. And here we go. All right, so if everybody can see that, this is our website. And under Charitable Gift Annuities, there's Gift Annuity Calculator. And if you scroll down, there's a media calculator. And I'm just going to plug in a couple of quick numbers here. 100,000, we'll call it cash. We'll say they're in a 24% bracket, and I'm going to say that he is 75. And calculate. So here's your page of answers. This is not something that you want to put in front of a donor. It's just to give you the numbers you need for a callback conversation. For instance, somebody contacts you and expresses an interest in a gift annuity. Get a little information from them and tell them you just want to grab some numbers and you'll give them a call back. This is what you can do with that. So you can call him back and say, at your age, it would pay you 5.4%. That'd be guaranteed for your lifetime. And if you look here, the tax-free portion is $4,400 out of the $5,400. So a little over 80% of the income will be tax-free to you as you receive it. Additionally, there's a $45,000, a little over $45,000 income tax deduction that you should talk to your advisors about using, because just that will put you well ahead of the standard deduction and give you a chance to itemize and maybe also itemize your property taxes, other charitable contributions, and all the other fun stuff that's on a Schedule A. So I just wanted to bring that to your attention. You always have access to that, and it's a great way to do a fast follow-up with someone once they've expressed an interest to get a little more specific with the gift and work toward closing the gift. I will show you one other thing here. Under About, there is our clients. And then here's a very long list of all the charities that we are currently serving and administering gift annuities for. A lot of folks ask us when I first talk to a new charity, they say, can you give me the names of, a couple of charities that you already work with, some sort of a referral. You're welcome to call anybody on this list. I will give you a quick heads up, and that is that some of these charities are part of the group that came over from Comerica that we took over responsibility for about 4 years ago. And they're fairly passive. We're just managing it for them. We're going to send them a check one day. but they're not real active in doing gift annuities. So if you randomly call somebody on the list and that's the answer, try somebody else, because there are quite a few on here that we work very actively with as well. I just wanted to quickly bring that to your attention. So let's go back to PowerPoint. I'm going to go here.
And Mike, before you jump over, a couple good points came up in the chat, just to let you know. Sort of the first one is I had a question about explaining the IRS discount rate. And so I don't know if you'd like to maybe do that now. It's on the calculator. Or...
Each month, about the middle of the month, the IRS publishes the AFR, the applicable federal rate. And that is the number that we use in the number crunching software in order to create proper illustrations. And so we incorporate that. You are able to use the current month plus the previous two. And what is happening now is the very last page of the crescendo proposal, and I'll show it to you. If there is a difference in the AFR during the current month and the last two, we give the donor the option of selecting, would you like to receive slightly higher tax-free income, or would you like a slightly higher income tax deduction? If they're not going to itemize, they probably want the higher tax-free income, of course. And if they are going to itemize, then they very well may want the larger income tax deduction. Is there anything else you want to add to that, Brian?
No, I think that's very well done. And I think that you said the exactly right thing. There could be sort of a bit of a seesaw between the two. The higher rate provides different implications. One thing that I would say, and I really meant to say this up front, so I think I'll just sort of jump in now. So I had done my PhD dissertation was on charitable gift annuities, and one of the elements of that was to try to understand or try to determine how many charities are actually issuing them and how many exist. And I think for everybody on this call, I hope this is very important, is that there are more charitable gift annuities in this country than all other split interest gifts combined. So if you take all the gift annuities, based on my projections, it was about 125 to 130,000 of these gift vehicles exist. And if you add up all of the charitable remainder unit trusts, annuity trusts, lead trusts, pooled income funds combined, gift annuities are still greater than that. So just sort of make that point when we're talking about this, or Mike's sort of talking about sort of how they work, this guaranteed income, and I hate to bring this up because it'll be painful for everybody. Well, I can all probably feel you wince. I think the market's down about 500 points today. Yeah. And the more volatile markets get, the more people, like especially when they're sort of toppy, where there's been a lot of gain built up, people like to lock in that gain without recognizing that income to get that fixed guaranteed payment. Our other partner on the phone, Russ Willis, actually chimed into the chat too, saying, by the way, Mike, when you're going through and discussing what the charitable deduction would be, that gift element of that cash contribution should be eligible for an unlimited income tax deduction for this year over and above the normal AGI because of the CARES Act. So we have this very interesting sort of wave or confluence of events of, very high stock market, getting a little bumpy at least for now. Who knows what will happen in the future for those people that might want to convert that into guaranteed income. At the same time, there's this very unique, perhaps once-in-a-lifetime opportunity to have a 100% of AGI deduction using a gift annuity or other gift elements too.
You see, folks, there's the best lesson you can learn today. Hang out with smart people. The last item here on this list is the gift annuities that we can issue. We can issue immediate, deferred, and flex, and I'll explain that. Immediate starts paying right away. Our minimum is 55 years old, so even if if somebody was 45 and they set up a deferred annuity, we cannot start sending payments until the youngest annuitant is 55, and then we can. Deferred, I'm sure most of you are familiar with that. The flex is interesting because it is a variation on deferred. The way that we do that is you can speak to the donor and we can set up a gift annuity that says, I'm going to defer this for 5 years. And so we do all the calculations based on that. Excuse me. So all the calculations are based on that 5-year deferral, their payment rate, their income tax deduction, everything is based on those parameters. But we put language in the contract that gives it a flexible option. What will happen is a couple of months prior to when we're ready to make the first payment, we'll contact the donor and say, we can start making these payments. We're scheduled to do that here in a couple of months on X date. However, if you don't need it right now and you would like to defer it for 1 more year, we can do that. Here's what your new higher payment rate would be a year from now. And we can do that for a number of years. We ask the donor to choose what is the deferral date 4 or 5 years out, and what is the maximum date of when you would start receiving payments, no matter what. And then within that, we send the flex letter every year and give them the option to either turn the income spigot on or to defer it for an additional year. Gift acceptance, we talked about that. Our fees, this is what everybody always wants to know. What do you charge for this? We charge 2% annually, 1% for money management, which anybody would pay anywhere, and then 1% for admin, state compliance, all of that. When a charity is issuing gift annuities, that 1% tends to get buried in the operating budget, and you have your accounting folks or your plan giving folks or whatever, they take care of all of that. So on the surface, it may look like they're doing it all for just the 1% money management fee or thereabouts. But that other expense is very real, and we put it right up front for folks. And the way that we do that is we go to the pool each quarter and charge 0.5%. So there's no fee to the charity, there's no direct fee to the donor. We simply charge to the pool, and with doing that 0.5% each quarter, we project a 50% remainder on all of our illustrations. Our minimum is $20,000. If somebody wanted to donate stock or mutual funds of $19,200, we can receive that as a direct transfer, and then they can write a check for the remainder. But our minimum has to be met, it's $20,000. They can be revocable or irrevocable, and that's the donor choice. And you'll see on our application a little bit later where they have the option to do that. It's a checkbox. We can also facilitate multiple charity beneficiaries available. And maybe that would sound unappealing on the surface, but getting a percentage of something is much better than 100% of nothing. So if the donor is interested in a couple of other charities or one other charity that they want to support with it, we can facilitate that and work with the development officers at both charities and work with the donor to get it in place. I do that all the time. There is absolutely no risk to your organization. You can scream that from the mountaintops and make your board members happy, because we assume all of the payment risk. So as long as the donor's alive, they get payments from us. If they live to 110 or 115, they have exhausted the gift annuity. There won't be any remainder for you, but your charity does not have to go into their pocket to make those payments. All of that is on us. So I'm just going to breeze through here real quick to show you a quick example of what, if you ask me for an illustration, let's just go back to where we were with the online calculator. You call the donor back, you give them a few numbers, they like it, and they say, yes, I would like to move forward. All that you have to do is send me an email, which is mike@nationalgiftannuity.org, with all their pertinent information, name, address, phone, email, the amount of the gift, the asset type, and then we'll create one of these for you and send it back for you to share with the donor and discuss with them. This is what the deck page looks like. This is the pretty color flow chart that shows you what their income tax deduction would be. And based on a 24% bracket, that's how much potentially in income taxes they could save. And here you can see we show a 50% remainder also. I'm sure most of you have probably seen some type of a crescendo illustration. This is just a quick summary here. And 82%. So you can tell them on your $100,000 gift, as you're receiving your 5.4% every year, about 82% of that is going to be tax-free to you. And the effective annuity rate is if you bundle together the income and all the tax advantages and everything and put it into one big ball of dough, you'd have to go out and basically find a 7.5% CD to give you the equivalent benefits of everything that this would. This is just a quick one-page explanation for the donor, for folks that are not in this business, to try and explain, attempt to explain kind of how all of this works, how the gift annuity works. Another summary, but here we're getting more into the IRS publications and so forth of where these numbers get crunched from. And this is a part of that as well. This is a cash flow. This shows the income taxation. So 2022 would be the first year of this. They would get 972 of the income that they received, the 5,400, 972 is ordinary income tax, 4428 is tax-free. And that goes all the way through 2034, which is his life expectancy. At that point, you can see that the 5,400 continues, but there's just not a tax-free portion of it. And if you outlive the odds and live long, at that point, who cares? Just enjoy the income and enjoy your life. This is about a 3 or 4 page section of for their professional advisors, and this explains in painful detail how where every single number in the illustration comes from. So this little 3 or 4 page insert, you can pull this out and give this to their accountant, their CPA. Sometimes those folks can be the deal killers if they don't understand gift annuities, if they've not worked with them in the past. And so you may have to do some education with their advisors, but this is something that gives them all the technical stuff that they would like to make sure that they're checking it out properly and giving their client the best advice. Excuse me. And then this is just a last page summary. It shows the capital gain rate we used for the illustration, the income tax bracket. The AFR rate of the month was 1.2, the annuities 5.4%, all of those parameters. All right, moving on. This is a copy of our actual application. We have a separate one with different account numbers and so forth for all the California folks, but this is what it looks like. The first page is just some text explanation about NGAF, what we do and how we do it. Then there is, immediate deferred or flex, when the payments are going to start. Do we pay at the first or end of the month? Quarterly, semi-annual, or annual. We can't do monthly. If they want checks in the mail, the minimum is going to have to be quarterly. We really encourage folks to use direct deposit. And I guess this is the best time to tell you something that I learned earlier this year. I had a lot of repeat gift annuities come in. And, when you create a gift annuity, it's locked in. It's all kind of written in cement, and you can't, there's really very little that you can change. But one of the things that we do is Alex sends the quarterly payments about 4 or 5 days early every time. And folks don't know us. They haven't heard of us. We don't advertise during the Super Bowl. We're not going to. So it's a lot of money for people turning it over to somebody that they haven't heard of. They're trusting you, they're trusting us. But after they've received early payments for about a year, year and a half, my experience is they're coming back and doing more. And especially with seniors, they're, another CD might be rolling over at 0.5% taxable. And if you can offer them a 4 or 5% income return, or an income payment rather, with tax advantages, that could be very appealing, and that might be a repeat gift for you and your work. So we have donor information, annuitant information. We always like to have a secondary contact. Here's the charity information, and you can see we have room to add additional charities if we need to, but we get your tax ID number in there, the designation if there is anything like that, for how they want to. The gift can either go to the general operating fund or to something specific, like a named scholarship fund, something to that effect. We have the donor signatures. The next page is just the voided check for the direct deposit. We have the application signatures here. Tax and legal, we do not hereby acknowledge, we don't give tax advice. So they sign off on that. And then there's a little checkbox at the bottom here. We need the application. We need the signed disclosure statement. I'll show you that in just a second. We need a signed IRS W-9 form. And if it's for 2 lives, we need both of them to sign that. We either need the check payable to NGAF, or we'll be talking about if it's some sort of an asset transfer. I always like to get a heads up from when to expect it so that I can let our folks know to watch out for it. The gift date will be the date that we actually receive the transfer. This is a copy of our disclosure statement. So I would insert your charity's name in these 3 places here. It explains NGAF. It talks about this individual gift. Here's where we would insert the state required language for whatever state that the donor lives in, not the state that your charity operates in. And then here we just have everybody's information in one place to make it simple. So we have all the donor information here. We have all the charity information and contact here. And then we have all of our information here. This is a fact sheet. We update this every January, February. I'll say every February, just to give us a little bit of wiggle room. But there's an easy way for you to get one of these. I have 2 of these. I have one for folks that are at the charity that mentions that there's no risk to your organization, et cetera. I have a second one that is the language has changed and it's for donors. So it makes it easier for you to explain a little bit about who we are. I have 1, 3, and 5-year returns for our pool. And then a lot of other information, about us and the work that we do. This is not quite the last slide, almost the last slide. This is what the quarterly report looks like. So every quarter, about 20 days after the end of each calendar quarter, you're going to get one of these for each gift. It'll show you the donor annuitant's name, the gift number, the original gift date, the current value date, the market value, the estimated liability, and who the designation, what the designation is for the remainder. And to watch our time here, I want to show you a quick example of how to go find one. It takes a little bit of guesswork, it takes a little bit of research, and it takes a good conversation with a supporter. But let me just show you a couple of free resources that you might find helpful. And I would challenge you, if this makes any sense, try doing just one of these during the last calendar quarter of the year and see how it goes. I've got a married donor, their age is 75 and 72. He's a retired exec. He worked for 30+ years for a big company. He is a current board member for your charity, and they're currently given about $4,000 a year. So with that in mind, I'm going to go take a look here and look at another resource. This is Yahoo Finance. This is free. There are pay sections of this, but this is just free. So let me show you a little something. I'm going to pick one that is familiar to me because my wife has worked for Home Depot for about 15 years now. And because I live in Atlanta, we of course have a residential requirement to fly on a particular airline while drinking a particular soft drink and thinking about what you will buy when you return home from a particular home improvement company. And so I'm just going to work with this. I'm going to go here to Max. All right. This is from all the way back in '84. This is the value of Home Depot stock over all of that time. And so you had a casual conversation and just ask them, how did you get started? When you started working? Oh, I started working sweeping floors in the summer of '98. All right, and he's worked there ever since. Now, I know that once you've been there at least for a year or two, there are stock bonuses and all sorts of things like that. So there is a likelihood that this person owns stock that is in the $40 to $50 a share range, and currently it's trading at over $300 a share. So that's tends to give people a feeling like they're locked in, because if they sell it to reinvest it in something that'll provide a higher income, they're going to pay a lot of capital gain. There's also an emotional attachment to this. It's someplace where he spent his whole career. But here's an important thing right here. 1.93%, that's the annual yield. So I'm going to call that 2%. Now what I know is that this person, if they own a couple $100,000 of stock that has a whole lot of capital gain in it, I know they're only getting $4,000 a year in income. And so if I use that earlier illustration where I know that ours would pay 5.4%, instead of getting $4,000 in income, now they're going to be getting $9,000 in income every year from the gift annuity. So that gives me a chance to go to the donor and say, we'd like you to consider increasing your annual gift. And if your circumstances are what I think they might be, I may be able to give you the income to do it. Would you like to sit down and talk about that sometime? And then just kind of work through this. It's not something that individual had ever really considered before that you knew about, but you maybe, if you shake the bushes a little bit, you may be able to find a gift that otherwise wouldn't just land on your doorstep. And if you want to see a couple of other quick secrets, if you go over here and click on holders, and you go down, you can see all the major holders. There's top institutional holders here, top mutual fund holders. There's 4 or 5 Vanguards. There's American Balance, Washington Mutual, quite a few of the American family of funds. There's an iShares ETF. And if you want to go a little bit farther, there's what's called an inside roster, and you're able to see some of the top officers with the company, and it even shows you what they're holding right now in Home Depot stock. A $200,000 based on current share price, that's less than 600 shares. So you can see some of these folks own a lot. These folks don't tend to be on charity boards. They usually send vice presidents and assistant vice presidents and that. But if you're lucky enough to have somebody at this level in a company that is also on your board and really cares about your mission, you've got a chance to find out. There's also here insider transactions. You can just, a lot of these folks, their job comes with a financial planner. And so they have it on auto sale price. So it may be a shot in the dark, but it may get you nowhere with it, but at least you'll know then. You'll have a little better, through that conversation, you'll have a little better idea of what that donor's situation is, and you may be able to craft a gift or a gift idea for them that would be most appropriate to their situation. So even if you don't get the CGA from kind of doing a little guesswork and taking a shot in the dark here, you'll have a chance through conversation to find out a little bit more about what their circumstance is. This guy, Matthew Carey, I told my wife she married the wrong Carey, because this guy's done very well, but I wouldn't take his job with a bag of money, because think about being the chief technology officer for the second or third largest retailer in the entire world. Just the protection that goes around that. I think that guy earns everything he makes. He works hard. And I am not related to him. I guess I should be, though. So let me go back to where we were. PowerPoint and share. We covered our fees. So I'm going to hand this back to Brian. He'll give you probably a quick review of some of the past 3 webinars that we have. I think he mentioned that earlier. And of course, we've been answering questions along the way, but we're happy to answer any other questions that come to mind.
Mike, thank you first for that, and I think I've answered the last question about 2 milliseconds before you handed it back over. So that's how we plan things at Charitable Solutions, the National Gift Annuity Foundation. Completely random, of course. But I appreciate that. That was definitely a quick jaunt, but I think very, very practical. Some of our other webinars that you can see here are, I don't want to say less practical, that would sort of sound bad, but we'll say a different angle relative to plan giving, and hopefully providing more information for you to sort of do your jobs with either clients or with donors better too. But I really won't go through this. This is just the bottom line. As you can see, sort of all of the past webinars, I will, I guess, call out there are a couple that were very advanced CGA, so this is completely on the other end of the continuum, but we have one in July and June that got very deep into CGA planning, both lifetime as well as through estates. But you can sort of see the rest of the content there. All of these are, again, available for free, and there's a little website website link. Any other questions at all? I think the only two things that Mike and I discussed, if we had a little bit of time, which I think may be of interest, is sort of how the ACGA actually recommends rates, and then also we have somewhat of the joke about this group lives forever. Not a joke, this group lives forever. And so I thought I'd maybe just talk about that very, very briefly, and any other questions that come through, maybe Mike, you can sort of take a look at those and jump in. So one thing is on ACGA. So as you know, ACGA has been around a very long time, since really the 20s. And I would encourage you, if you guys are offering any kind of CGAs now for donors, to really consider joining the ACGA. It's a fantastic group, a lot of advocacy, never mind just the sort of solvency, both research and support around rates in particular. And they do things more than just CGAs, so sort of beyond that. But the way that works is there's a volunteer committee. They come up with a series of variable assumptions, and I had the great pleasure and honor serving on that committee, I want to say for 7 or 8 years. And so there is an investment assumption based on an allocation of 55% fixed, using the 10-year Treasury as the proxy for that plug, 40% equity, and then 5% cash using the 13-week T-bill. So that becomes the plug investment number. Then on mortality, there are a series of assumptions that are used. So the Hay Group is an actuarial outside firm that typically will do updates for mortality studies, and then that's sort of baked in. And then, as Mike has mentioned a couple times, the average then future value, it's very important to understand future value, average residuum, or otherwise known as a remainder, is at the 50%. So that it basically, we sort of build the model to say what income payout rate based on the age would then provide for, on average, a 50% in the future of the original gift. And that's really how the payout is constructed. Now, there are about 8 to 10 pages of that on the ACGA site that goes much, much deeper into that. But basically, that's what occurs. I'm still very surprised in a good way that so many charities that issue gift annuities do follow those maximum payout recommendations. I think it's maybe 92, 93% or so. As Mike said, we have always followed those, and it would have to be some very strange reason why we wouldn't, and so really have no intention of doing so. So that's sort of how rates are constructed. The second piece is around longevity. And so what I might do, just because I would like to get the readership above 3, is we actually did, as I mentioned, we received a grant to the firm, and we worked with a couple actuaries that we have on staff to produce an actual mortality table for gift annuitants, as I mentioned, for the Society of Actuaries. And so that is published data. It's a lot of statistics that at the very end basically says they live forever. I find this interesting. You may or may not, but the Society of Actuaries has, I think it's 178 what are called cohort life expectancy tables. So cohorts are subpopulations. This isn't really one, but sort of my joke is, people who live in Wisconsin who ice fish and chew gum. I mean, it's like these super little, very refined characteristics. And the point is, of the 178 or so that they have, this group lives longer than any they have ever seen. And I think it's fairly obvious why. Think about this. They are opting in at a very advanced age. Age 78 is the average age. They're doing that voluntarily. Many annuities are not voluntary, which you might say, that seems weird. Think about all the people who retire from a company like Home Depot or others, and they take a pension annuity. So there could be a requirement to take an annuity. It might be for their life or life in joint or life two-thirds, et cetera. So usually those actually can be required annuities. These are voluntary. They're opting in for this vehicle. Two, they likely are in the top 1% socioeconomic profile. They're wealthy. That's how they have excess, at least for us, $20,000 of excess to give away, even though they're getting some income back. So they probably didn't work in coal mines, probably had very good access to health care. So think about this. The oldest members voluntarily opting in, who are the wealthiest and healthiest, because it can only be based on their life expectancy, are voluntarily, again, opting in. That makes an actuary sweat. That's got adverse selection all over it. And there are some things that the ACGA tries to do as part of the overall rate construction. However, being on that committee, we would have these discussions over and over and over. We are basically trying to recommend, think about this, the maximum suggested rates for the Montana SPCA that has one gift annuity, as well as a large religious organization that has thousands of gift annuities. And so we don't know whether they're restricted. We don't know if they're all young. We don't know if they're old. We don't know if they're female. We don't know if they're male. And we don't know if they're very large versus very small. So all of those constraints, we just have to say we're having to sort of assume the sort of all unrestricted, and people have the law of large numbers, which no one does, as it relates to rate recommendation. So anyway, thought that may or may not be helpful. So I think we've got maybe 2 or 3 minutes left. If there are any other questions at all? Looks like, yeah, so Donna, thank you for that question. So it's mentioned how NGAF will proceed establishing a gift annuity funded with real estate. Yeah, it's a great question. And so we do maybe 4 to 6 in that range gift annuities each year with real estate, having a number of conversations about those with S Corporation stock as well. And so the bottom line is, because, as Mike mentioned, we do so much on the illiquid asset side for outright gifts, we do a few each year, maybe 4 or 5 for charitable remainder trusts as well, but by far the bulk are outright major gifts. But the point is, as part of our team, we got Russ Willis on our webinar today, is answering some in the chat, which is great. So we got Russ Willis and Gary Sneerson, who are 2 sort of internal super technical people. Gary in particular takes the lead on real estate for gift annuities. He led Harvard's program about 14 years sort of in that space. So without going into a lot of detail, we actually use a special contract to be able to give us some risk management. So the concern always with real estate or other illiquid gifts is, A, how long is it going to take to sell it? And B, what are you going to actually get for it net? So what are the liquid funds coming in? So we use a special contract that can help mitigate some of that risk. But we do actually, again, a fair amount. We've got, I think, 2 now that are retained life estates for gift annuities, tend to work really well on larger properties, 500,000 plus, and for older donors, usually 85 plus, 90 plus actually is even better. So the point is, I'll sort of circle back here. It looks like aren't any other questions that have come in, which is fine. Our whole mission is to help make gifts happen that otherwise wouldn't. And through National Gift Annuity Foundation, for those of you on the call here that are saying, look, we know we kind of want to have it on our menu, and we know a lot of donors like them. Again, there are more of these than any other life income gift or split interest gift, for that matter, that exist. But we don't want to sort of create the whole program and do all this stuff. And that's where we can fit really well. Or maybe it's a state university that says, look, we've got our state covered. We're good in our state. But New York, California, Washington, we don't want to register there for 1 or 2. It's just not, the juice isn't worth the squeeze. Just call us on those. Call Mike on those. And then so we're able to sort of just pick those off. This is not a contract to do all gift annuities. These are just the ones that otherwise, remember I said right at the beginning, that you otherwise would decline or sort of hold your nose or bite your lip to otherwise accept. Same thing down into your question. What if it's real estate? You might be thinking, oh, do we really want to do that with real estate? We're working on one right now for potentially for cryptocurrency. So lots of your donors have lots of different kinds of assets. They live in different places. They have different charitable goals. And to the extent that we can help otherwise capture a gift that would not have occurred in the first place is literally why the entire firm exists. We're doing that now, as you see, at least on the non-cash side in particular, with over $2 billion in donations we have received. This is not theoretical. This is we've actually swallowed them, sold them, and spit them out based on a donor advised fund recommendation. Same thing in the gift annuity space. We're growing this at about a 15 to 20% a year clip. For those charities that say, you know, we just sort of don't want to keep doing this, we just are never going to have the scale, we're an aggregator. And so a great question came about how do we manage the risk? We're an aggregator. So if we can get a large enough pool, we get scale. We just did our own internal actuarial audit about 2 months ago. Very good shape. We're in New York, so we have to meet all the fund New York reserve requirements. We meet those very well. So long story short, as we sort of close here, Mike, thank you so much sort of for walking us through and your efforts the last 5+ years with the National Gift Annuity Foundation. But I do hope this has been helpful to all of you on the call aid to better understand gift annuities better for your own program, or whether National Gift Annuity Foundation could be helpful, local community foundation, national religious foundation. There can be sort of third-party providers that are able to outsource these particular gifts at no risk. As long as you're good bird dogs, just point at that prospect that Mike was mentioning before, and either we can be helpful, they can be helpful, but capture gifts otherwise that wouldn't have happened to help your donors meet their charitable goals and maximize their impact with you. So thank you very, very much for all spending your time, and we'll circle back later. Yeah, Mike, you got a question?
If you'd like a copy of the fact sheets for charities and the fact sheets for donors, just send me a quick email, and let's do some gifts together. We got 3 more months for this year, and we are embarrassingly available to help you.
Sounds good. Thanks, everybody. Have a great day.
Thank you.